Welcome to this guide of our SWOT-Driven financial model for 3 to 5 year periods, which is a cutting-edge financial tool designed to integrate your SWOT insights with dynamic financial projections. It features a toggle option for 3, 4, or 5 year planning horizons and empowers startups to align their strategic planning with financial precision. So let's explore the unique features and see how this can enhance your business planning process. As mentioned, there's a toggle option, 5 year period currently set at, but you can very easily toggle and say, listen, we only want to take a look at a 3-year horizon. What happens is the model is designed in such a way that all the other components are automatically updated for you. The years that's not applicable, and in this case year 4 and 5, is removed, all the data, and that literally cleans up the model for easier readability. Also, what we found is that a lot of clients and investors want to take a shorter horizon view of a business case or a financial model. And this tool automatically allows you to do that. So instead of doing 3 different comprehensive models, one for year 3, one for year 4, one for year 5, you can very easily just toggle and see what happens with the model. Now, the model is designed for simplicity and ease of use. The dashboard and all the input sheets are guided input areas that have cells highlighted in yellow and blue text. Now, this is for intuitive navigation. All inputs automatically update across the model for seamless integration. So you only require to include your inputs in the areas or the cells that have yellow shading and blue text. If you see here, if we remove the 500,000 British pounds, automatically the cash runway period updates, which is applicable. If we increase this to, let's say, 2.5 million, automatically you see all the other checks and balances updates. So let's just revert back to where it was. Also, the dashboard includes all other components needed to get a glimpse of the model, whether it's your return of rate of return, your cost of capital components, your balance sheet items, closing items, in this case in year 5, your valuation methodologies, etc., etc. Now, as mentioned earlier, all inputs are required from you in the yellow shaded blue text areas. Now, the dashboard have assumptions that look at inflation, your provision for contingencies, working capital, funding, loan parameters, loan terms, cost of capital, etc., etc. Throughout the model, you'll see we've incorporated read notes next to specific cells. And this is really to guide you and give you some explanation of what is meant if we say, for argument's sake, expected equity market return. It gives you a quick rundown of an example, but also what is meant with that definition. And the same is true throughout the other sheets as well. Wherever we feel there's a need for somebody to have some further understanding of the terminology, we've included it there for our clients. Before we come back to the cost of capital component, the rest of the assumptions included in the dashboard are your high-level assumptions that relate to your sales price for your various revenue channels or product categories or services. In this instance, this model allows for you to forecast up to 10 different product categories or service categories or revenue channels. Once again, everything is updated for you as you use the model. Now, all these inputs automatically gives you an income statement that's completely automated, a cash flow statement, and a balance sheet. You don't have any further need to update or to make changes on these statements. It's done for you, and there's checks and balances in place to make sure that everything is in balance and that there are no errors made with the inputs. So it's once again just there as guidelines to assist you. Here you can see all these checks and balances are in place, funding in balance. Right at the bottom here you'll see in balance, debt in balance. So all these checks and balances are in place to make sure that mathematically everything is correct. The dashboard itself concludes with high quality graphs that have been automatically designed for you without the need to still do that. Now, if we go back to the cost of capital component, and this is one of the key elements of the model. In addition to the 3 financial statements and all the ratios, we've built in two components. The one is 5 valuation methodologies. In other words, you can determine the value of your business, in this instance, your startup, based on 5 different valuation methodologies or methods. And this is really for comparative purposes. It makes your life easier to understand exactly what the pros and cons are of the various valuation methodologies. It gives you an indication of the potential value of the business across various methods, but also it gives an investor an indication of what the business value is. Now, this can be used for many purposes, whether it's investor discussions, equity partner discussions, whether you want to sell the business, buy into a business, etc. Now, in addition to that, these are all financial focused components that drives the cost of capital. In other words, how much the debt that you take on or the equity that you take on, what the cost of that is. What we've incorporated as well is a very detailed non-financial component, which is an integrated SWOT analysis. Now, the logic behind this is that your strengths and opportunities, if they outweigh the weaknesses and threats, then it's a reduced risk in your business, and investors would reduce the risk premium that they would add to the actual cost of the capital. So the more strengths you have, internal strengths, the more opportunities that are available in the business, the less the risk is to actually invest in this business. And the same is true for the flip side. The more weaknesses there are in the business inherent to the business, and the more external threats there are, the greater the risk is to actually invest in this business. So you can actually go from this major main dashboard sheet, you can go to the SWOT analysis itself, and then here there are more than 60 questions that you can then answer that's specific to your company and rate it accordingly. If we take an example, let's talk about customer segments. We are failing to acquire new customers, which is a weakness, and we are continuously acquiring new customers. Now, let's say, for argument's sake, you're in a situation where you have a lot of customers, existing customers, but you're not getting it right to actually acquire new customers. This will be a weakness, and you can rate it anything from -1, which is a bit of a weakness, right to -5, which is a really exorbitant issue and weakness for yourself. So let's say it's 5. Automatically, you'll see the score here will also update. And the same will be done then with the opportunities and the threats. Various questions are asked here about your markets, about customers again, and all of this is linked to the building blocks of the business model canvas, which is quite a very important component of the actual business plan. Now, once you've done the rating here, we would then go to the cost of capital risk premium adjustment, and it automatically updates for you, and it shows you here that your weaknesses on the strengths and weaknesses side outweighs your weaknesses outweigh your strengths, and there's the additional risk premium that is added. So this would actually increase the risk in the business. If we look on the opportunities and threats side, here the opportunities outweigh the threats, and the risk is reduced by the specific risk premium. So if we go back to the financial dashboard, here you can see the -0.5, which is a risk, and then obviously the opportunities and threats component there as well. Now, in addition to that, the risk premium adjustment is also then translated into a business model canvas. You might want to use this for the purposes of your presentations or business plan. And once again, all these various components of the business model canvas is rated for you. It's automatically updated for you. It shows you your scores of opportunities versus threats, strengths versus weaknesses. And once again, it just adds weight and credibility to your overall business case. So that is an extremely vital component of this business financial model and business case. The other input sheets you'll see from the description in the actual product page would be your funding, and this is where you decide on how you allocate your funding and make notes of that, but also how you split your structure your equity, your funding, whether it's between equity or debt. Your depreciation itself would be calculated here based on your minimal inputs your first year's operating expenditure, which will then carry through to your income statement, and the same with your labor. Everything is updated according to your input year. So if we return to the dashboard, you can see that all these inputs from the 4 input sheets automatically calculates and drives into the income statement, balance sheet, and cash flow. And then once this is done, once all your inputs are done, you basically just go to the valuation sheet, and once again, no more inputs from your side. Everything is done for you. Everything is calculated on your behalf, including the graphs, your valuation methodologies, the summarized versions of your 3 statements, the various cash flows that investors want to take a look at. It's done here for you. The repayment terms, the balance check to see that everything is in balance is done for you. Your rates of return on investment is done for you, and here you'll see is your 5 valuation methodologies done and calculated for you without any involvement or very basic knowledge on your end needed. So the idea behind this model was to make it extremely user-friendly, but also extremely intuitive and comprehensive to whoever the readers are, whether it's just for the purpose of the business case or funding purposes, or whether you want to use this as a management tool to address various strategic issues that derive from the SWOT analysis. I thank you for exploring this SWOT-driven financial model with me. And you'll see that with its integration of strategic insights and the robust financial projections, this model can really empower you to create data-driven business plans and confidently sit in front of investors and negotiate various components of your business and funding requirements. So start customizing it today to unlock your business's full potential.